Hey investor friends, I'm michellemarki, and as you've probably seen, Alibaba and other Chinese company stocks crashed this week in the market's reaction to President Xi Jinping getting a third term in office, and somehow that spooked the market so much that the plot is thickening. And it's just so interesting to see where things might go from here, because just when it seems darkest, it could either be light at the end of the tunnel or it goes pitch black, who knows? But I'm gonna share some thoughts about what I think is going on, and also some things to be on the lookout for, and also maybe we can gain a little bit of perspective and wisdom from what famous and legendary investor Charlie Munger said back in February at the Daily Journal Corporation's meeting, to understand what might be the rationale going on in China and their form of capitalism. Because of course we can easily think from our Western perspective, but maybe we're wrong. So it's good to have an open mind to see what could be happening, and I'll try to talk through some of these points. So if you also enjoy learning about stocks and trying to follow and see what happens to some of these companies, please be sure to like and subscribe to my video and YouTube channel, and let's get into what's going on with Baba. You could be wondering if this is the end for Alibaba stock, because after Baba was trading at around $72 per ADR share on Friday, October 21st, by Monday, October 24th, it fell by about 20% from $72 to $58, and it's since recovered to around the low $60 range at the time I'm recording this. But essentially, this suggests that a lot of foreign investors have pretty much all but given up hope in Alibaba, where it's trading way below its 2014 IPO price of $68 a share. And if you adjust that for inflation, that's more like $85 a share. So compared to that, Alibaba stock is still down like around 30%, which is incredible how much people seem to have lost faith in a stock that once hit around $310 a share at its height. And it would have to be a five-bagger to return to that level. And at the level that I think folks like Charlie Munger may have bought into it with Daily Journal, they may have initially paid around $240 a share. So if Daily Journal wanted to recoup their costs, they would need to probably have it be at least a four-bagger to maybe break even. And presumably maybe Daily Journal bought into it at even lower prices, but that's kind of what you're looking at if you're hoping for Alibaba stock to recover someday. But otherwise, at this point, if you're still holding on to it, there's probably no point in selling, because you would just be locking in a loss unless you can use it for tax loss harvesting, and that can offset some of your capital gains and other stuff. But that possibility notwithstanding, it seemed like the market was super unhappy with Xi Jinping firmly having another term, and maybe even being worried that maybe he'll be a chairman for life like Mao was. And maybe they think that this is not good for the growth of the Chinese economy. But we have to remember that China's economy did pretty well in the last decade that Xi Jinping was at the helm. So you would think that it would suggest that he would continue to do what's right for the Chinese people. And they've lately tried to implement this common prosperity initiative that's been around since 2021, and some suggest could take until 2035. And what that's about is trying to restore some equality, because with all the economic gains that China has had, there's been some more inequality, and they want to spread the wealth across the entire population pie and not just have it be at the extreme. So we can maybe understand why this common prosperity goal is such a big deal to the Chinese Communist Party right now. And also Alibaba has had to contribute to that by committing $15.5 billion from 2021 through 2025. So even though we might think of that as sort of a fee, but they see it as an investment in the Chinese people and economy. So maybe that will hopefully pay dividends in its own way, because if the Chinese consumer can have confidence again to spend money, maybe it will be worth it in a few years after this dark cloud has, passed them by. So I would try to think about some of this as it could be their version of their bubble crashing, especially with how real estate has been in a lot of trouble, and the projected GDP this year for the Chinese economy is maybe only going to be about 2.7%. So compared to how the Chinese economy used to grow at a GDP growth rate of at least 5 or 6% in recent years, that's a big slowdown, if not an outright recession, with how much the real estate housing crisis is gripping the Chinese economy. But you can just sort of see this as their current struggle, and we have to try to remove ourselves from the immediate concern and try to look out, what could their economy and population look like in 5 to 10 years from now? Will it be better, or will it continue to struggle, especially with marriage rates on the decline over there? So maybe their population is not growing as much as they would also like, and there's concerns with education and ed tech also maybe not being the best to the Chinese youngsters. And even though it seems like the Chinese government is weighing with a heavy hand on the people in the economy, they're also trying to make it better. So you would have to think that they're trying to do the right thing and not just hamper growth for the sake of it. So some of the things we can be on the lookout for as far as potential bright spots are if they lift some of the COVID-0 restrictions and then people can go back to normal again. And also if they lighten up as far as the regulatory constraints that they've had and allow some of the Chinese tech to kind of continue doing business as usual, but with some modifications that comply with their regulatory expectations. And even though things might be looking up on those fronts, one thing that could be potentially negative is if the US fights China over Taiwan, and also if some of these Chinese ADRs were to be delisted from American exchanges, then that might also not be such a good time. So these are some of the pros and cons that we might need to look out for in the coming years. And if you own Alibaba stock, this is the kind of thing that you just have to be completely unemotional about and set it and forget it, and maybe wake up in 5 to 10 years and see if it's actually gone back to the levels it was at before. If not, maybe even thriving by that point in time, because this could be kind of the opportunity that people like Warren Buffett and Charlie Munger look for, where if you have the nerves of steel, it could be potentially a fantastic buying opportunity in the low $60 range. Of course, none of this is advice, but if you are willing to buy at this level, then my kudos to you, because you have to truly have the conviction that this stock will not only recover, but will actually do really well in the future, especially if you think about how much more there is to serve in the Chinese population, especially 10 to 20 or 30 years out from now. Can you imagine? People will probably be using more technology services and not less, and more cloud services and not less. So can you imagine that once they get through this dark time, that maybe they'll be able to thrive again? And also maybe Charlie Munger's words at the Daily Journal meeting about China could be his famous last words, or he might be proven right in his infinite wisdom, because let's listen to Charlie Munger to remind ourselves what we should know about China.
Well, we did it for a very simple reason. We got more strength per dollar invested. In China, the companies we invest in are stronger relative to their competition and priced lower. That's why we're in China. Well, the Chinese government is worrying all the capitalists in the world way more than it used to. And of course, we don't like that. And we wish that China and the United States got along better. And if you stop to think about it, think of how massively stupid both China and the United States have been to allow the existing tensions to arise. What bad is ever going to happen to China or the United States if we two are close? If we make good friends out of the Chinese and vice versa, who in the hell is ever going to bother us? Of course we should make friends with China. And of course we should learn to get along with people who have a different system of government. We like our government because we're used to it, and it has advantages of personal freedom. China could never have handled its life with a government like ours. They wouldn't be in the position they're in. They had to prevent 500 million or 600 million people from being born in China. They just measured the women's menstrual periods when they came to work and aborted those who weren't allowed to have children. You can't do that in the United States, and it really needed doing in China. And so they did what they had to do using their methods. And I don't think we should be criticizing China, which has terrible problems because they're not just like the United States. They do some things better than we do. They should like us and we should like them. So I'm totally, I think nothing is crazier than people who foment resentments on either side of that one. And they just change the whole system. I greatly admire what they did. I think Deng Xiaoping is going to go down as one of the greatest leaders that any nation ever had, because he had to give up his own ideology to do something else that worked better. You don't see the Catholic cardinals suddenly deciding there's no afterlife. But that's what Deng Xiaoping did. He gave up his ideology, his communist ideology, in order to make the economy work better. And being an absolute ruler, he could arrange it. And he brought that whole nation out of poverty into prosperity and over the course of 30 years after he made the decision. That is a very admirable thing to have done. And it was kind of a miracle. It's just amazing how well capitalism has served the communist Chinese. Deng Xiaoping called it communism with Chinese characteristics. He meant one-party government, but with most of the property in private hands and a fair amount of free enterprise. That's what he meant when he said communism with Chinese characteristics. I don't care what he calls it, he was right. It was a marvelous thing to have done for China. And it worked wonderfully well. And of course, we shouldn't be trying to transfer more and more functions to the government.
And so I have a few takeaways and thoughts after listening to Charlie, in that obviously Charlie approves of how they're running things over there. And also it's pretty incredible when you think about how they brought millions of people out of poverty in such a short amount of time, and how fast they've not only adopted technology, but how much they're rapidly innovating on it. So all of those things are pretty impressive. And also we have to remember that the Chinese government actually has a financial stake in a bunch of Chinese companies. So it's in their better interest to allow them to grow and not just have a heavy hand on them in a regulatory sense forever. So I could see that ending sooner than later. And also maybe back in 2021, Chinese companies seemed more appealing on a valuation basis compared to American stocks. But now that American stocks have come down in their prices, maybe for folks at Daily Journal, it'll be more compelling to invest in American equities compared to maybe some emerging market stocks like the Chinese stocks that have gotten hammered. But so far in the Daily Journal Corporation's 13F filing for the third quarter 2022 that came out in early October, they've neither sold nor bought more BABA, but have kept it as is for now. But who knows? We'll have to see. And I previously talked about which super investors are still in BABA and which ones have bailed. So feel free to check out that video to learn more about what super investors are still in it, and also some of the financial performance that BABA has done lately. But otherwise, this is a kind of thing where you have to either accept the way they do things in China or just leave it be and just invest in other things that you feel more comfortable in not only owning, but in that you're more comfortable in understanding. Because I don't claim to be a China expert by any means. I'm just trying to figure all of this out like you are. So who knows if we are just better off sticking to domestic stocks. Maybe that'll be better for some of us for which this stock might be falling too much for us to handle. But if you found this video helpful or learned something, please like and subscribe. And I wish you well in investing in the stocks that you feel the best about. Till next time.